one of the most profound hypocrisies of Bitcoin is that while it's an asset intended to democratize finance, it's also one of the most unequally distributed assets in the world. That is according to our next guest, Ryan Giannotto, Director of Research at GraniteShares ETFs. Ryan, welcome back. Happy New Year. It's a pleasure speaking with you. Let's start with Bitcoin. Can you explain what I meant by what I just said? I quoted you right just now. What did you mean by that?
Yes, David, it's great to be back. Yes, and that is one of the fundamental ironies of Bitcoin, that really it's a major challenge for the asset class. It is intended to be a financially democratizing force, yet it is so profoundly distributed in an unequal fashion. It's really unlike anything we've ever seen. And this is one of the perils of Bitcoin investing that goes unreported, undiscussed, and that really investors need to pay attention to. It is a seriously cornered asset class where only about 0.05% of Bitcoin investors control over 40% of all Bitcoin. And this is a serious, serious problem. And even if we go down a little further, we can see that about just under 0.5% of all investors control over 5/6 of Bitcoin. This is a massive problem when you have a seriously unequal playing field. And this can only exist in the unregulated asset that is Bitcoin. It's a double-edged sword. There are virtues to being unregulated, but here we can clearly see that it is, a substantial peril for all investors, given that so few control substantially all assets.
Ryan, how is that different in concept from, let's say, a stock that just simply has a majority stakeholder in it? For example, Tesla, 20% of Tesla stock is owned by Musk. But that's a risk you have to consider every time you buy any asset, right?
Yes. But what we need to consider here with Bitcoin is that the market is effectively cornered. Not even the Hunt brothers could dream in their wildest fantasies of how cornered Bitcoin has become. Where, we need to think about how silver, the Hunt brothers controlled less than 1/3% of all silver, yet we're able to basically increase the price of silver fivefold. And this is what happened with Bitcoin, where the supply is so tightly controlled by so few. If indeed those investors ever to take any profits, basically the asset class it becomes a wash. And this is one of the dangers. And it's really why we've seen such volatility with Bitcoin, and also to the downside, the down draws. If there is any attempt by these, sort of original investors to take profits, to take risk movements, the volume will drown the asset.
Well, the Hunt brothers' involvement with the silver market was widely speculated to be the cause of the huge spike we saw in the early 80s. Do you think something similar is happening with Bitcoin today? Is that why it went from, 10,000 to 40,000 in less than 3 months?
Yes, the asset has been it's been a roller coaster ride, to say the least. Really, I don't think there's any real precedent, any real precedent we can consider benchmark Bitcoin against. And again, this is a indication of how tightly controlled the market is. There is so free Bitcoin available and so much ravenous demand. And if in fact those original controlling investors decide to take profits, it will drown the asset class. And this may be what we saw back the last bubble, when it peaked about 19,000. Whatever the of Bitcoin are, from an economic and philosophic standpoint, this is a real challenge the asset needs to surmount to become a legitimate mainstay investment.
Well, I guess the obvious question then, Ryan, is who are these individuals holding the majority of Bitcoin and what are they thinking? So, do you have any insight as to whether or not it's institutions or any particular individuals? Who are these people?
Well, we can all go. Well, that's the great thing about Bitcoin being a digital ledger. We can all go and look up. It's public information, the concentration of this asset. But the downside is it's anonymous. We don't know who they are. We just know that it's sort of like, black holes. We can detect their gravitation, but we can't directly observe them. And it's really illuminating. Most likely these are people who got in early, when it was at, effectively zero, substantially zero, and have rode it up all the way. It could also be, the called lost Bitcoin investors, where they've been locked out of their accounts. And so it's really, there are a number of forces that have constricted the supply of Bitcoin and have really seen a dramatic surge in price.
Can you comment on the liquidity of Bitcoin as an asset? How easy is it for, let's say the majority stakeholders of Bitcoin that you pointed out, let's say they were all to decide to sell the next day. Would their sales go through?
I think that's an untested event. But, if these original investors decided to take profits, they decided to sell, they decided to execute, it would be several times the daily traded volume of Bitcoin. It would wipe the asset out. Whether it would go from there, I don't know. We've never seen an asset like this that's been fundamentally unregulated. And that's part of the excitement, the ride, and also the
can you comment on the mechanics of an asset that moves 20%, 30% in a day? This is what we saw last time. I mean, how much liquidity and how much trading volume does it take to move an asset 20% in one day in either direction?
It all depends on supply and demand. That's what it all comes down to. And what we're seeing, what is producing these dramatic upswings in particular, is that there is such a finite supply of Bitcoin relative to, it's predominantly retail investor demand. Very small purchases that are just driving the price up. Is it a bubble? Is it the next currency? We don't really know. And what's so fascinating is that the behavior of central banks, so irresponsible throughout 2020, really, it makes Bitcoin look a far more attractive alternative. It's for the first time, central banks have a direct benchmark.
Okay, we talk about institutional money buying into Bitcoin a lot on the show. Well, GraniteShares is an institution. Are you considering adding cryptocurrencies to your holdings, let's say to the HIPS ETF, for example?
We wish. And that's part of the excitement in the space now, is that with the new SEC chair, he's a bit of a Bitcoin fanatic. He held courses on blockchain, and we will finally probably be able to see a Bitcoin ETF. And the real potential here is that institutions now have a real way to access the market, unless they just want to go and buy individual Bitcoins. But because it's an unregulated market, many have been unable to cross that Rubicon. And a Bitcoin ETF will absolutely provide a gateway to real institutional capture. And that's what I think is so fascinating. We see almost a parallel dynamic
you're right.
between Bitcoin and Tesla, where basically institutional interest has forced retail interest has forced institutional capture. Basically, it's been a hostile takeover of, the investment institutions by just sustained and fervent retail interest. The S&P 500 had to adopt Bitcoin because of retail investors, and we could see a similar dynamic play out with Bitcoin.
Yeah, you're right. You brought up the ETFs. There have been several attempts in the past to make an ETF for Bitcoin. I believe the Winklevoss brothers have attempted that as well, and that got rejected by the SEC. Why were these attempts rejected, and what's changed today?
Great question. Yes, as you bring up, coming from the ETF space, there were probably at least a dozen serious, well thought out, well reasoned ETF applications. They were summarily executed. It all came down to the SEC chair, outgoing chair, Clayton. With him out of the picture, it's now open. It was really a game of legal cat and mouse. What they said was it was not regulated, but the emergence of Bitcoin futures on CME exchange, allowed for a regulated and orderly marketplace that could be observed. The second argument, however, was that it was not a significant asset class, that it was too small, there was not enough interest. And by now, I think this is what we talk about when we talk about institutional capture.
Ryan,
retail has forced the hand.
Why don't you go make one? Don't tell me you haven't thought about it.
Allowed. Trust me, we've tried. We have tried. We have personally applied and played this cat and mouse game with regulators. We have been shot down every step of the way.
Hold up. Why is it so much more difficult to make a Bitcoin ETF and not a gold ETF? Did you go through the same legal loopholes when GraniteShares created BAR?
Well, no. Because basically it all comes down to that the SEC hated Bitcoin. They were not going to allow, no, seriously. The SEC chair was not going to allow it under any circumstance. And with his departure and a new blockchain enthusiast coming in, Van Eck has filed, many other, entrants have come in. I think we will likely see, if we don't see a Bitcoin ETF in 2021, we will see substantial progress.
What's going to happen once Bitcoin ETFs are legalized, well, not legalized, but allowed and introduced to the market? Are we going to see less volatility or more?
That is such a tough question.
I mean, once an asset matures, one would think that it becomes less volatile, right? And this is the conversation I remember having with my friends a couple of years back. As Bitcoin matures into an asset that's adopted by more users, we should see less daily volatility, but we're still seeing, 10, 15, 20% moves in a single day. So clearly my thesis was wrong.
It all comes down to, again, how basically the effective float for Bitcoin is so small relative to the asset class. With basically the substantial majority controlled by, I guess what you'd call inside investors, there's such a small amount of Bitcoin relative that's actually able to change hands. And the prices of Bitcoin, where they are now, where they may go, are courtesy of these institutional holders that have not basically increased the float, increased the supply. They're basically holding tight. They haven't sold yet. I don't know. I can't speculate what their motivations are, but that's the fundamental driver of volatility in Bitcoin.
All right. Last segment of the interview, I'd like to get your thoughts about the economy and inflation. And, gold's been tapering off lately. I suspect it's because inflation expectations have come down in the wake of a weaker economic outlook. Jobs numbers are still bad. What do you think? What's your take?
We've seen the 10 increase. It's now over, 1.1. It's breached that threshold, which this is let's be honest, this is a phenomenal recovery, in treasury yields. They bottomed out at, about just over, 30 bips. This is, very meaningful recovery. Scheme of things, these are very de minimis yields in returns on investments. And, the inflation expectations, they're in flux right now. They're in flux. People are trying to understand what the new administration will bring, how, Yellen will take the end of the Fed, once more, will be more of the same, or is past Yellen precedent, no longer valid? Are we now in a whole new, economy? The playbook has been thrown out. It's been burned. It's been destroyed. It's gone. So this is what's really exciting. We don't know where inflation can go. And the bond markets are trying to price this. What this means for gold is that although nominal yields have increased, inflation expectations are very erratic. We're seeing commodity prices rise. The dollar has been weak. But I think the real potential for gold is strong.
All right. Very good, Ryan. Thank you for your update today. We'll talk more about the economy next time. Thank you very much.